What's up, YouTube? In this video, we're going to talk about Coca-Cola, ticker symbol KO. Year to date, company is down 13.6% over the course of 1 year, 2.8%. Coca-Cola reports their earnings on October 24th, and we can see analysts have revised their EPS revisions. 12 of them are down and 1 up. So not expecting very good earnings out of Coca-Cola coming up next week. Also worth noting, Coca-Cola still pays a decent dividend of 3.3% and currently trading just slightly above 52-week lows. It hit 52-week lows, I believe, early last week and since has recovered off of those 52-week lows. So we're going to go through their financials. After their financials, we'll run their financials through a calculator, many calculators, and figure out a fair market value on Coca-Cola, and then look at the stock chart and figure out where this thing is technically trading. So we can see our revenue, gross profit, net income here, all three trending higher as of lately. However, one thing I like to point out, currently at 44 billion, used to be in 2014 at 46 billion. Cost of revenue is up at 18.3 compared to 17.8. Gross profit is then down slightly. However, operating margin is up quite a bit, but we can see SG&A is contributing a big chunk of that to increased operating income, which then gives us a higher net income. So that's awesome, awesome stuff to see. So we have our gross margin, which has declined a little bit over time. However, our net margins went from 15.4 to 23.8. Revenue growth year over year, we can kind of see just there really isn't much growth at this company. We can really easily see that. In the last 9 years, there's been literally no revenue growth, actually slightly down on revenue growth. Return on invested capital, 10, now at 14. So doing really good on invested capital, just 1%, 0.9% shy from where I like to see it. Cash short-term debt, you got more short-term debt than cash, but sitting at $15.7 billion in cash. A lot of long-term, well, total liabilities that the company's sitting at $71 billion in total liabilities. Net income to free cash flow, they've got a little more net income than free cash flow. That's good. Free cash flow sitting at $9.5 billion. 2014 was $8.2 billion, so it has increased ever so slightly over there on that side of things. Share count, pretty flat, 44.5 billion shares and currently at 4.3 billion shares. So it has decreased slightly, but still quite a bit of shares over there. Dividend has been just steadily growing, and that's one thing that people like a lot about this company is their steady growing or a dividend paying company that just every year they increase their dividend. Very strong dividend growth at Coca-Cola. Capital expenditures have shrunk up a little bit over the course of time, but lately are starting to increase again. So overall, financials, pretty good. It seems like they've become more efficient within the company because we can see their revenue has not changed much, but yet their net income has gone up quite a bit, and their net income margins are pretty good, a lot better than what they used to be. We have two other companies to compare to, Pepsi and Monster. So we scroll down here, we can compare all three companies to one another, and we can see market cap. Coca-Cola is the leader in market cap, but not the leader in revenue. Pepsi is definitely the leader in revenue here and gross profit, but then come down to net income. Coca-Cola produces more net income than Pepsi on less revenue. 5-year growth rate, we can see Monster has a pretty substantial growth rate over here, and Coca-Cola in second, followed by Pepsi. Gross margins, we'll just take a look at all three margins together here. We can see that Coca-Cola is the leader almost on all three of them, but Monster's not too far behind. Monster's got pretty good margins as well, so Monster might be a company worth looking into in a future video. So we got free cash flow. Coca-Cola doing pretty good on free cash flow. Pepsi doing okay. Monster shrinking, but they are a growing company, so that could contribute to some of their having such a small free cash flow. Return on invested capital at 14% and Monster at 18%. Pretty good. So we can see PE. So you're going to pay a bit of a premium over here on Monster, but that probably has a lot to do with, well, not only good margins, but also a pretty high growth rate at Monster. So Coca-Cola, we know, really doesn't have much for growth in it. It hasn't even grown at all in the last 9 years. So you're not going to pay as high of a premium for Coca-Cola, but we'll run these numbers through a calculator and figure out what Coca-Cola is worth. So first off, we have Peter Lynch valuation. That gives them a price tag of $30.74. Multiples comparison, $77.25 compared to Pepsi and Monster. Manual PE, we take our market cap minus cash, add in debt, divided by cash from operations gives us 26 years. So that tells us we are slightly overvalued on that metric. Price to book, 5-year average, 11.2. Currently sitting at 8.5. Grams valuation gives them a price target of $70.16 and a dividend discount model down here, $56 and a penny. DCF price tag on this company, we gave, analysts had 0 for growth rate, I believe is actually negative. I gave them 2%. That gives them a DCF price per share of $45.38. Rule 72, we have 3 sources for an EPS growth rate. That gives them an average growth rate of 8.5. That goes into 72, 8.4, and then that will go into 10, 1.19. So we get to double our EPS 1 time and then 0.12 times. So I give them the future EPS of 6, which gives them a fair value of $25.72. So over here at our summary on Coca Cola, currently trading $54.61. Fair market value that we just got based on all of the metrics we just went over, all the calculators, is an average of $50.88 per share. 30% margin of safety, $35.62 per share. Analyst price target, $66.92. Now let's take a look at the stock chart. Coca-Cola, we're now somewhat in what could appear to be a downtrend. So there is some headwinds on Coca-Cola, I think. There's 2 major headwinds. I think number 1 is going to be that weight loss pill, drug, whatever the heck it is, that's causing a lot of short-term fear in a lot of these consumer companies such as Coca-Cola. And I think that's got something to do with some of the sell-off here, because you can see that across the board in most of those consumer companies such as Pepsi and Hershey's and other consumer companies that are rely on people to buy their product or their food or their drink or beverage or whatever. But we can see it bounced off what could be a resistance point here, about $52 per share, which is slightly above where our price target was for fair market value. I think if it breaks through here, its next stop is about $50 per share, which would be just slightly below where our fair market value is on Coca-Cola. And if worst case, this thing could come back down to about 46-ish dollars per share. There is a little bit of support in that range as well. So if it does pull back, you could see it potentially bounce off this trend line and maybe resume back higher on Coca-Cola. Now, the second headwind I think there is for Coca-Cola is this dividend yield. You can grab a bond right now for a much higher interest rate than what Coca-Cola is saying. We got you can get a 30-year bond for 5%, or you can grab a 2-year bond for 5.1%, or, a 10-year bond was over 5% when I was originally starting this video. So you can see that I think that's another big problem with Coca-Cola is, yeah, it's got a good history of dividend yields, obviously, and growing dividend. But somebody that's relatively new within the company or a newer investor, they're gonna be like, well, I'm just gonna go grab 5% on a bond. It's guaranteed. And also, I should potentially see price appreciation on that bond, assuming bond yields start to tick lower. When bond yields tick lower, the price of bonds go higher. So I think there's a couple of small headwinds on Coca-Cola in the shorter term. Obviously, that shouldn't really impact the overall business much. The diabetes, or not the diabetes, but the weight loss pill might impact it, but I know that I believe it's Pepsi that's working on making smaller portion sizes, and I would assume Coca-Cola would probably follow in that same direction and would combat any potential impact to their revenues. I'm sure they'll find a way around it, and it's just a short-term headwind, but then that opens up buying opportunities for people that want to buy Coca-Cola at a cheaper price. And not just a cheaper price, but a fair market price as well. So as we can see, we had a fair market price of basically $51 per share. So I think, Coca-Cola, I believe, will probably reach that area. I think we might see this thing break through and come back down and retest this trend line. Not guaranteed, but if it happens, I think that's a very likely possibility. Otherwise, this might just bounce off here and resume back up higher. But that's what I have for Coca-Cola. If you found value in this video, drop a like, subscribe, comment. We'll be back later with another stock analysis video.